Okay guys, good morning. I hope everyone's well. Looking forward to the session. We've had a lively start, I guess, in terms of price action, certainly on, well, specifically European equities actually, where we've had a pop higher on the DAX. You can see my middle left-hand chart here. We've had a pop higher that's kind of all been given back already. I guess one thing of note, we'll talk about this to start with regards to yesterday's session. Cable has dipped and just in the last hour, or in the last half an hour, taken out the low points, the kind of double bottom that we had from yesterday. So yesterday morning and yesterday early afternoon, we found a double bottom, 121.40. I guess in what was otherwise a pretty quiet day for any kind of interesting developments. Certainly the value of sterling kind of led the pack with a move to the downside off the back of Theresa May's sort of hardish Brexit chat. I was reading an interesting article this morning in the FT actually, just about the fact that, so this journalist was saying actually Theresa May, even though the press is saying that she's not giving any kind of detail as to what her strategy is, why haven't we got more information, what the hell's going on? And he was actually saying, well, to be fair to her, she's actually been consistent and clear for the last 6 months in that she's continually been saying Brexit is Brexit, and we are going to separate from the single market. It is going to be a hard Brexit. I mean, that's been her consistent message. It's just that kind of social, I guess, leftish journalists refuse to accept that as being a possibility. So rather than reporting on this issue rationally, they're actually reporting on it irrationally. And so rather than choosing to believe that a hard Brexit is possible and that's going to happen, they choose to instead interpret the situation as Theresa May's not delivering us any information about what the strategy is, when actually she is, to be fair, and it's a move away from the EU. I think if you look at Theresa May's Home Office record when she was in charge of the Home Office for 6 years, then certainly her want to get back control of immigration was certainly a strong part of her policy preference. So that plays into the kind of the hand of the hard Brexiteer. Anyway, certainly her comments yesterday, similar to what she's been saying before, to be honest. But I think markets are beginning to or at least beginning to entertain the idea that a hard Brexit actually might well happen here. So anyway, sterling weakness. You got a bit more of that this morning. This is what really was the feature, certainly of the morning session yesterday. If we just go to a weekly chart for cable, just to kind of get this into perspective, where are we here in the grand scheme of things? Well, we're still off the ultimate low, which was on October the 3rd, and this is the 35-year low, remember. And that was a key break. This was the kind of flash crash day, 7th of October. And in the end, on the futures, we hit 120.34. Spot market got down into the 118s on that day. But you can see where we are. We're just kind of flirting with the lows we had the week after the flash crash and then the final week of October. But so, it's been quite a negative month as we've tracked back below 125 and now, aiming at what looks to be, almost certainly is going to be, I would say, an inevitable test of the 2016 low. And as things stand, probably a break of that. And then of course we eye up the 120 handle, which is key. So certainly sterling weakness. The FTSE 100 again had an up day, and I think the stat is that we've now had the most number of consecutive new all-time highs printed or something like that ever. The FTSE 100 index is kind of 33 years old, I think it is, and so the FTSE 100 is still benefiting quite sharply from what is a continued weakening story for the currency. So the official stat, FTSE 100 index has closed at a record every day since UK markets reopened after Christmas. So that's now 8 new record high prints in a row, and that is that's a new record. Or sorry, it's not. Okay, I've massacred this stat. It's not a new record. We beat it once only, and that was in 1997. Anyway, you get my point. FTSE 100 still benefiting from a cheapening pound. Right, let's move on. You know, what else is going on out there? If you've been reading the press this morning, then I don't know, there's a lot of chat around supermarkets here in the UK. This is because Morrison's, and this isn't particularly related to kind of the macro scene that we're used to looking at, but it is getting some press coverage. So I thought I might just do a little bit of a tangent briefly. Morrison's have posted better than expected sales, and so they've had the best sales rise over Christmas for 7 years, is the stat. And so this has led to the grocery sector enjoying a little boost in share price. I was just checking this out with regards to, because it's quite let me switch up the screenshot. I'm going to show you a chart here on the Kantar website, which is looking at market share and how market share has changed amongst the big guns, because we've had a real disruptor in this sector, of course, over the last few years with the arrival of Aldi and Lidl, the German budget supermarkets hitting the market aggressively and winning market share, taking market share away from the big guns like Tesco's, for example, and Sainsbury's and so on. Well, Morrison's reported earnings this morning, much better than expected over Christmas. Huge upside on share price. But actually Tesco's perhaps been the most interesting of the lot, because Tesco's not only had to deal with the new kids on the block, Aldi and Lidl, winning market share, but they've also had their own kind of internal scandals of their own. But if you check out this chart, it's actually looking at, in the last 2 years, how has market share changed. And you can see the blue line here. This is Tesco losing market share. And by the time we got to the end of 2015, in the second half of that year, they basically lost 1% of market share. And they lost that, as you can see, the orange line here. That's actually Sainsbury's winning market share, but you can see the two at the top. These are your disruptors. These are Aldi's and Lidl's consistently winning market share through time. But Tesco scandal saw their market share drop. But look at what's happened since then. In the last 12 months, Tesco have actually won back that lost share. But what's happening this morning, there's a lot of chat about big upside on retail share prices, and that is true. And let's just take a look at Tesco's. Because today Tesco's share price has opened 3.4% higher, and it's like, wow, it's huge upside, amazing. But actually, it's a bit of a nothing, this story. I think it's a bit of a missell, this story, because ultimately the retail sector more broadly got hammered over Christmas. If we look at the last 1 month, look at Tesco's share price in the last 1 month. It was up at like £2.20, and it's dropped briefly below £2. So it's down 10% in the last 1 month. That's even with today's rally. Look at the last 3 months, and well, you get the idea, right? So actually share prices dropped quite sharply into the end of the year, and that's because we had the likes of Next. So the big giant UK retailers, Next reported profits at the low end of their forecast for the Christmas period. So the retail sector overall got hit. But actually Morrison's today, with their results, it suggests that weirdly we've seen the UK consumer over the Christmas period spend less on the high street in clothing stores, and to make up for that, it looks like they're spending more on groceries. So perhaps this sell-off we've seen in grocery share prices in line with the rest of the retail sector is invalid, and so you're seeing a bit of a bounce on that. But as you can see, even with this bounce, Tesco's share price bottom of the range of the last 3 months. If you go back 5 years, you'll see even more so, given the scandal we had into the end of 2015. Tesco's share price is not far off, still half of what it used to be if you go back to 2013. So Anyway, good news on the retail front, on the groceries front this morning, which is getting a bit of attention on the press. But as I said, not massively relevant, I would say, for what we're looking at. I'm going to transition my chart back. Let's check out oil. We've had some action on oil this morning, which has now just been given back. We did get some upside going on. We had a tweet earlier suggesting that there's going to be a meeting between the top 7 OPEC producers. We've had a story whereby the Kuwaitis are saying that OPEC, Russia are to fulfill their pledged oil output cuts. We obviously had a big downside for oil yesterday. I'd say the two main themes of yesterday's session was not only sterling weakness, but oil weakness. Oil down about 3.5% in the end. This kind of came off the back of data out of Iraq showing that December Iraqi output reached a record ever high, which, all right, is actually fine, because this production cut promise wasn't for December, it's for January. So actually the important thing is, all right, it's not great to see Iraq still ramping production up in December, but ultimately the more important thing is, are they going to cut production in January? I mean, that's the key. Also, the other factor kind of tying into this sell-off yesterday is the Baker Hughes rig count. This is now looking at the US producer. And of course, and if I just bring my oil chart to let's say a weekly time frame, obviously we've had a 2016 rally that's been pretty meteoric in the end. I mean, it really has. If you take the lows we had 1 year ago, we are more than, well, actually now we've sold off back to $52. I guess we're roughly double. The price is double what it was 12 months ago. Now this has played into the hand, certainly at the end of last year into December, breaking back above 50, new 18-month high, and so this brings the price point higher, making the more expensive shale production process more economically viable. And so we've actually had 10 up weeks in a row on the Baker Hughes rig count. That means for 10 weeks straight, more and more rigs have come back online in the US, which suggests that US shale production is back on the up. And so this is also part of the story with regards to that move lower yesterday. But now I've got this long-term chart on. $52 is incredibly important. And we're testing it. We tested it yesterday. And this is the high point that we had in middle of October. Also, the summer high was at 51.67. So we're in an incredibly important support, long-term technical support area here. Anywhere like $52 down to sort of 51.60 is very key. So that's why today's session, I would say, is very important. If I go back to the 1 hour chart, if I draw that line 51.63 or whatever it was, that was the summer high from last year, then we just about avoided it. And this Kuwaiti comment this morning helping to kind of tick things back higher, but as you can see, the upside momentum's kind of run out pretty quickly, and we've turned and we're kind of back to mid-range and shaping and trying to get back below $52 here. So do bear in mind the longer term technical situation here for oil. We'll get the API numbers tonight from the US, and then the Department of Energy numbers as usual tomorrow. Also, don't forget about the fact, and I'll talk about this in more detail in a minute, but Trump is talking tomorrow, press conference, and we know his views on oil. And his views are that he wants the US to ultimately become self-sufficient. He's very much got a policy preference for making it easier for US producers to produce more. So that he might, who knows, he might talk about US oil producers tomorrow, we'll see. But keep your eye on oil. Already a blip to the upside, but momentum on that seems to have gone. So bear in mind that long-term technical support area. Let's have a look at some other data. We've had some data overnight. We've had some data from China, which is quite interesting, although hasn't really produced much market reaction. This is quite a phenomenal chart. This is PPI, that's producer price inflation, or otherwise more informally called factory gate prices. How much do factory or manufacturers pay for their components effectively? Obviously Raw material costs, commodity costs, very much a part of this story. But what was phenomenal about this is we had 54 months in a row of PPI deflation, negative numbers for 54 months straight. Big dip into 2015, of course, as commodity prices collapsed. And then as commodity prices recovered last year, we've seen this PPI almost 5-year deflation story come to an end. But what's remarkable is the print we had overnight, which has seen PPI surge to plus 5.5%. So not only have we seen an end to the deflation story, but it's dramatically rebounded into actually now quite a powerful positive. So this is a 5.5-year high. September 2011, the last time we had a higher PPI print. Now, as it stands, this was to be expected. Okay, not quite such a high number, but this trend reversal has been coming. You know, we know this is happening. What I would say is going to be more important is to see whether this massive jump to 5.5% is just a snapback before things settle down, you know, in the 2 to 4% band. Or whether, I mean, I would say if we get a PPI print next month, which is higher than 5.5%, well then, all right, this is going to become a bigger story. We've already got the likes of...
The Iraqi oil minister says they've cut 160 barrels per day of oil.
So I'm just
in terms of under the OPEC agreement. That's from Iraq.
Right, an important comment from Iraq there. Obviously, the Iraqi part of yesterday's sell-off was about... let me just switch back quickly to the oil chart. I'm not getting much action on that comment straight away, but some of the move lower yesterday was about Iraq and their production in December moving higher. So the oil minister in Iraq has just said they've cut 160,000 barrels in line with the OPEC deal. I guess you could say, though, but is that cutting from a higher output rate given that their production went up? So I guess this is one way, this is one part of the implementation risk. You're going to get OPEC nations say, well, we cut as we agreed. So Iraq is saying, well, we cut by 160,000 barrels. That was our part of the deal. It's just that they're cutting from a rate that's higher than when that OPEC deal was made, if you see what I mean. So net in the end, they're not cutting 160,000 barrels from the rate of production at agreement. I mean, that's one of the kind of ways they can kind of get around this, and on the face of it look like they're cooperating with the deal, but actually in fact they're trying to be sneaky. Anyway, you got to just keep your eye on oil here after that comment. We're just up testing $52 again. I just quickly wanted to show you on the inflation front more globally. I'm going to bring in a chart here from the Deutsche Bank report on the right hand side. This is looking at the IMF's inflation expectations, and what we've got here is for the first time in 5 years, this is looking at 5 year ahead, so it's 5-year inflation forecast, which is one of the favored kind of time frames for inflation forecasting. And for the first time in, well, since 2009, I think it is, you've got the IMF finally expecting inflation in 5 years' time to be higher than inflation is now. Okay, that's what that means. So really, and this feeds into the Trump story, or the Trumpflation story, because you know that's the big theme for 2017, or at least one of them, is are we going to see the globe return to an inflationary environment? You know, a feature of the last couple of years has been a deflationary environment. Look, you're getting oil on the upside now a little bit more. I'm going to quickly flick back to my oil chart. It's a bit of a delayed reaction, and it's not a very big one so far by any means, but we've had 20 cents on the upside here off the back of this Iraq comment. So keep your eye on this. We're back to testing, well, one point, what was the high from overnight was around 52.17, and then of course we got the high of the day up at 52.34. So touch of upside here off the back of that Iraqi comment. Yeah, but just back to what I was saying, you know, I think certainly inflation in China perhaps is going to be that ultimate measure for are we seeing a return to inflation in the emerging market arena. The inflation levels in the US are going to be a measure of, you know, Trumpflation, and is Trump going to be able to deliver, his fiscal stimulus. So on Trump, on that point, this is the big part of the week, and who knows, it could be the most important part of the month, and that's Trump's televised press conference. I'm just going to switch back to my chart whilst I talk about this. Trump's televised press conference is tomorrow. It's the first time he's had a press conference since he won the election, and I was reading an article this morning by one journalist who made, I think, a very good point, and that was actually his press conference tomorrow could well be more important than his inauguration speech, which is on the 20th of January. That's when he actually gets into office and starts work. Oil's still ticking higher here, 52.20 now, so that's 30 cents on the upside. And the reason why, the argument was, why is this press conference tomorrow going to be potentially more important? And that's because his point was that the inauguration speech is going to be a very polished, very practiced and rehearsed set text. It's going to be perhaps a speech which obviously the whole world's going to watch, where he wants to come across a bit more statesman-like. So it's going to be rehearsed and polished. His point is that tomorrow's press conference perhaps is going to be a lot less so, and you're going to get Trump in a much more familiar, behind the camera, more relaxed environment where he might have some more off-the-cuff comments. And so maybe we're going to get some more market sentiment stuff out of this press conference tomorrow than we're going to get from the inauguration speech. Of course, we want to know ultimately, what of his policies from his campaign is he going to deliver, and most importantly, are we going to get this giant stimulus package delivered? If I quickly show, let's just take the oil chart and minimize that. Let's just keep half an eye on it. Obviously, the big story since the election has been the fact that, of course, markets have, as I've used that word, Trumpflation. This is the Trumpflation trade, if you like. That is one of certainly dollar strength. So let's show you that by looking at the euro versus the dollar. Dollar strength, so big move to the downside here in the euro-dollar exchange rate, as we expect strong pickup in economic growth. We expect a strong pickup in inflation in the US, and therefore we expect the Fed to hike 3 times as a result. That's dollar strength. What about equities? Equity strength as well, because whilst, the Fed might hike 3 times, actually the scale of the pickup in economic growth is expected to be fast enough to offset that more tight policy. Okay, so this is the second part of the Trumpflation trade, equity strength. And then the third part and the final part of the jigsaw is yields rising. Again, it's all for the same reasons. Let's look at T-note prices. So T-note prices dropping and yields rising. Again, this is pricing in higher inflation mainly, and then also on the shorter end, I guess, yields rising on the shorter end, that's pricing in more Fed rate hikes. It's also, I guess, a little bit of rotation of assets as money goes into the equity space at the expense of bonds. This is Trumpflation. Now, are these moves valid? Well, we might start to find that out tomorrow. This really is a big, definitely the biggest event of the week, and could be the biggest event of the month. And who knows, not wanting to hype it up too much, but could be the biggest event of the year. Although that's probably not the case, because ultimately we want to see what gets delivered once he's in office. We often talk about the first 100 days of a president being, enough time for a president to really, get comfortable in the chair and start kind of rolling out policy. So the first 100 days of a presidency are particularly focused on as a kind of measurement of what's this president about. We're not on the campaign trail now. What's he actually going to deliver? So we're going to start to get this ball rolling tomorrow with this press conference. So what traders want to see is him coming out being bullish. Is he going to deliver on his promises on the fiscal side? And of course here we want to see tax cuts. We want to see him talk about a pragmatic, almost like business-like approach towards managing the economy towards much higher growth. So we'll see. One thing that's developed on the Trump front. Who's this guy? Oops, I showed you the headline where you can see his name here. Jared Kushner, who's now been named as the senior advisor to Donald Trump. Jared Kushner, if you don't know who this guy is, you should do. He's Trump's son-in-law. So he's just been signed up as one of his senior advisors. That puts him in position as perhaps one of the most powerful people in the White House. There are nepotism laws against this kind of stuff, but Trump's got around that apparently because Jared will be receiving a salary for his role of $0 a year. So he's not getting paid, which apparently that's how he gets around this nepotism law. Anyway, this is where, I don't know, there's skeptics behind this, of course, whereby Trump, is ultimately the big kind of conspiracy theory is Trump's he's just in the White House to further his own gains. Forget about running a country. It's more about himself. And the skeptics point towards some of his kind of tax plans in that he wants to make the higher tax rate much lower, which of course would benefit the rich, which of course he is. He wants to make regulations and the tax situation for the real estate sector a lot easier, which of course that favours him. He's electing half of his family to key positions, blah, blah, blah. Anyway, there are skeptics out there that will see this move. We were expecting it, I guess, anyway, but they'll see this move as further evidence that Trump means to use his power to his own benefit. Anyway, the big story of the week will certainly be that televised press conference that Trump's going to be delivering tomorrow. Okay. All right, let's just finish with the economic calendar for today, though. And unfortunately, it's not looking particularly exciting, I'm afraid. Really, everybody should be sitting and waiting for this Trump announcement tomorrow. But we've had that number on inflation out of China last night. Through the morning, we've really got nothing, I'm afraid. And in the afternoon, unfortunately, we've got nothing of major interest. We've got something in bold here called JOLTS job openings numbers, but these are never market moving. I don't know why they've bothered putting it in bold here, and the reason they're not market moving is ultimately this is November data. It's old. We just had payrolls for December last week. So it's pretty old, this number, and therefore doesn't tend to move things, especially with Trump tomorrow. So unfortunately, on the scheduled information flow, we're not expecting much today. So let's see how we go. I'd say, and I think Anthony and Will said this yesterday, don't kill yourself this week at the start of the week. The action's going to come in the second half of the week once we've got some more guidance from DJT. So keep your patience. Obviously, pick up trades when they come. That little move on oil there was little, but actually was an interesting opportunity. You got 30 cents out of that if you were quick. But now it's about, right, caution. Okay, I'm going to book that profit and I'm going to sit and be patient. When we're looking at interesting levels, I don't know, cable breaking below yesterday's low, for example. These kind of little opportunities arise every now and then. But by and large, a session like today is going to be slow, I would say, and good opportunities might be few and far between. So you just got to be patient in between these opportunities, but then be confident enough to pull the trigger when a good opportunity does arise. All right, patience with confidence at the right times is the way forward, and then hopefully we're going to get way more action across global markets once Donald opens his mouth on live television tomorrow. Okay, guys, that's it for now. Enjoy the session. Thank you.